Okay, welcome everyone. This is me, Guillaume, and I'm here with Brendan from the Panoptic team. This is Options Hour. Very interesting week we've had. So sometimes we have the class on being an LP on Uniswap or the Stop Losing, Start Trading show with Rosalie. But today we wanted to spend the whole time talking about the news, the events, uh, M&A season, as Brendan aptly put it. So there might not be any financial advice, but whatever we see here, regardless, is not. So, and on that front, yeah, we'll just talk about what we see in the market, what we think, how options are impacted, and much more. So, yeah, this is, first of all, yeah, how are you doing today, Brendan?
Doing great. Last night I was doom scrolling, and saw the big post about Derive and Synthetics. So, big talk about another merger and acquisition following on the heels of the recently announced Deribit acquisition from Coinbase. So, this is obviously the talk of Twitter town. This is a proposal basically that has gone out publicly on both the Synthetics and Derive kind of forums, and so neither are approved from either side yet. And so there's a lot of discussion, debate, and I think it just kind of signifies the whole. I don't know if it's excitement or like what's going on in the space, but obviously big bumps in prices in ETH. We're up 60% over the half year, up like 20% or so on the weekly, or 20 or 30 actually. I think we're
I mean,
at
I see on CoinGecko, it's 7 day gain of 42%.
42. My bad. The
It's
the
it's.
world's perfect number.
I mean, it all happened within the past 7 days, but it's oh my god, yeah, it's like human beings being human. Everyone is now ecstatic, whereas we're all depressed. People feel vindicated for sticking around, but at the end of the day, like no one knows, no one's in control. But yes, it feels good to see some price action. We're back to where we were in March ish, but yes, that's still fine. Back to
Literally, yes.
2500.
Very ecstatic markets, and potentially kicked off. People were discussing, what is this? Is it just this simple UK trade deal that kicked this off? Maybe it's the behind the scenes things like the Deribit acquisition. Because that is big news for the space. And then we found out later this week, I think it was yesterday or the day before, about the Coinbase shares getting listed as part of the S&P 500. So definitely lots of things going on behind the scenes, behind closed doors. Maybe some insiders knowing about this, pushing the ETH price, Bitcoin price ahead of time. We can all speculate on the
Yeah,
role of
someone
ETH.
always knows.
Yes.
Maybe it's the I don't know, the Ethereum Foundation. Maybe they had they're trying to maybe kind of capture and then be a bit more proactive, but they had the $1 trillion security initiative. Uh, Anyways, it seems like everyone is working pretty hard, whereas the past 3 years was probably coasting. So I feel like Uniswap, not Uniswap, but Ethereum Foundation is definitely on the offensive here. But yes, with Coinbase, with acquisition, is very interesting time for sure.
What's the $1 trillion, or did you say three
Oh,
trillion dollars initiative?
yeah, they announced this 3 hours ago, but they are. I mean, I can the $1 trillion security initiative, which is an ecosystem-wide effort to upgrade Ethereum security to help bring the world on chain. And the key point is that they want to make sure that billions of people are comfortable putting thousands of dollars on chain, and that's kind of where you get a billion times a thousand. But the key point is that I like, it's very people focused. It's trying to kind of make the whole blockchain a bit more kind of secure, of course, but legitimate, something that people are comfortable with. You don't need fast, you don't need lots of data, you just need security at the end of the day. And that seems to be the focus that the Ethereum kind of blockchain is uniquely poised to kind of capture. There's like hundreds of thousands of validators, including myself. Every once in a while, I mine a block, I take control of the whole financial ecosystem, financial world computer for 1 12-second stretch. It's hard to do it for most blockchains, which is kind of the trade-off space. But yes, I'm still a big believer in Ethereum, and that might be the best way to frame this. We're not maybe the quickest, we're not the bigger blocks or whatever. It's mostly the most secure, which ultimately like what people care about.
Yeah, there's the huge growth expansion potential there, to bring real world assets on chain with that security model. I think a lot of people, when they're issuing, they're probably thinking mostly between Solana and Ethereum. You know, maybe they're thinking some private chain. That was back in the days. I,
Meme coins on base and kind of these layer twos. They
I
don't
guess, yeah, layer two, right?
where if the Coinbase sequencer gets shut down or hacked or anything that happens, even a government agency can push around Coinbase much easier than hundreds of thousands of validators. But yeah, that's one risk. That means you may not want to have all your tokenized gold sitting on a chain that is at the whims of maybe Coinbase's sequencer. So
Yeah, I mean that's a good argument for an L1 like Ethereum or Solana, and then between the two, I think it does make sense on focusing this as your value prop. Especially the joke that's been going around is, or maybe not so much joke, half joke, but like Coinbase is getting listed on S&P 500, and then the S&P 500 will soon get listed basically on Coinbase or on Ethereum. So
I like it.
that's the hope. That's the hopium we're all smoking. But yeah, definitely markets are ecstatic and leading into a lot of announced M&As. So let's dive into this Synthetics Derive deal. So I'll quickly just go over kind of maybe what's going on here. Real quick, share my screen here. So this is a blog post, but this has been posted across many forums. It's the SIP 415. This is the synthetic improvement proposal, I believe, to acquire Derive, who did I can't remember if they started on Synthetics platform or but they definitely have a very close relationship. Derive uses Synthetics. I believe they use their stable coin. They probably use their tech in certain ways. There's a very close relationship.
Yeah, there's a lore. I think
Yeah, do you have
the
any?
Lyra Finance team it started in 2021, which is kind of very early in the world of kind of. They went to Optimism and then Layer 2, and they were like maybe the second or third app to go there, which is kind of very, very. And Synthetics was also on Optimism. So this is definitely where a lot of this relationship comes from. But the I did think they did use their stablecoin, but also Synthetics for hedging purposes. There's always kind of a risk management, and they had Lyra back then and Synthetics on the same layer two. They were able to kind of cross pollinate a little bit. I think now again Derive is on its own chain, so it's again you can access it through, for instance, Optimism, but it's not as direct. So maybe that proposal with blobs being cheap, with everything going down, you don't even need maybe an app chain can do all of it on the layer two, and you have kind of this synergy. So makes sense. Again, the yeah, I'll let you go through it, but
Yeah,
yeah,
before you jump into the analysis, just to give more background. So I'll give some background on Derive. Maybe if you're more familiar, because I don't really understand as much what Synthetics is doing nowadays, or even back in the past. But basically, I'll give a quick overview. Derive, started as Lyra. That was the name in 2021, as Guillaume just mentioned. They focused on options. They're basically a CLOB, central limit order book options. They let you buy options. I believe you can sell as well. They have various pricing mechanisms. They had like different fees that they would all calculate with their algorithm to try to match Black-Scholes off chain. Very complicated product to build. And then it was mostly attracting ETH and Bitcoin options. They did a whole rebrand. Their tech was good, but not seeing as much traction probably, and then problems with their token. Basically, they did a whole rebrand into Derive earlier, I think last year or so. It seems like just yesterday, but time flies in crypto. And so they've recently expanded. They have options and perps, and then they were playing with some vault stuff, I think. But basically, they still have the majority of their volume is options. I was looking at DeFi Llama today. If those stats are accurate, they're looking at around 500,000 in volume per day as of the last 24 hours. But anyways, so that's the Derive spin. They're an options protocol, pretty solid tech that they've been building over 4 years. But Synthetics, who are they? What is their product? How has it changed, and why do you think they're interested?
Yeah, I'm not super familiar with Synthetics myself. I've never used it, and I kind of get the value prop for Medicines, which is kind of this. It's a tokenized assets in a way. It's backed by the Synthetics token, and you can kind of post collateral and mint a synthetic dollar, but you can also mint a synthetic ETH, a synthetic token. That's where the name, I guess, comes from. So it is there's a bit of looping around because the value of your synthetics token is what backs your minted asset. So they've survived for so long. I think it's fine, but there is kind of a level of, if the token crashes for some reason, then maybe that whole protocol could cease to function because a lot of these tokens may not be fully collateralized. So that's kind of one way. But they've been kind of, I don't know the traction now, but they've been there for a long time. OGs for sure. Kane is the founder, and how he's creating Infinex. Some people think that it's kind of the merger is to also fold them into Infinex, which is kind of this consumer facing app, perhaps. But yeah, I think that's since it's a blog post and everything seems to be very, very PR ready, I doubt this was kind of out of the blue for sure.
Yes, no, given their close relationship in the past, and Synthetics has acquired two protocols recently, just in the last half year, I think. One was TLX, some leveraged trading platform, and the other was a probably bigger name you've heard, Quenta, the Perps exchange. So that was back in November, I believe.
It was, I think Quenta was a while ago, like years ago, maybe.
Oh, the acquisition, yeah, but
they used them. I know that for a while it was confusing because Quenta was where you would trade, but then the Synthetics app was where you could like mint stuff. So
yeah, they had a close relationship. So Quenta was built on Synthetics for Perps. Synthetics bought them out.
Similar deal structure with tokens.
Yeah, acquires their platform in a token for token transaction. Yeah, I think they phase out their token is like 1 for 17. I think Derives is 1 for 27. And then they phased out the Quenta token. Basically, you can exchange it for your SNX token, which is currently valued at 300 million. So Derive is being valued at around 27 million with this deal, and I think that's where maybe a lot of the community pushback is at the deal terms, because I'm not sure. I think the community knows Synthetics is OG. They, in general, they're okay with that brand, but they also are big believers in the brand of Derive. Derive has been building for so long, trying so hard, rebranding, doing a lot, and really their product works as a club, but it's very, very difficult to compete with Deribit, as you know. So I think part of the anger on the opposing side, let's say, would be with the brand getting eliminated. I think part of this value prop, or the proposal, is to basically take over the Derive brand and replace all the names with the Synthetics name. So people don't like that. And then just the valuation of 27 million. I don't know if you're aware of the Echo-Term deal.
No, that's right. I did not participate, or maybe it was before I joined Echo. But yeah, some people were definitely exposed to a higher valuation than 27 million when there was an Echo round. It is kind of the unfortunate reality. Sometimes these goes up or down. I think the Derive team, and this is kind of this is from the blog, but yeah, I think they are kind of bringing the Derive team internally to Synthetics, which kind of is buying talent almost in that case. And they can rebrand, but still the infra is still there. So it's not as if it's kind of going to disappear, because if they are buying an options platform, hopefully they'll have options, which I don't think Synthetics has. So that's kind of the silver lining to maybe is that perhaps your Synthetics token will now appreciate, maybe not at the level of 5x, which might be the discount on Echo, but still, you could imagine being part of this larger consortium of perps, but also options could help. But yeah, and some extent, I don't know if Derive voters or Synthetics voters ultimately are the ones choosing. This is kind of a Synthetics proposal, so I don't know if Derive token holders have to vote on the other side. But yeah, as you said, if it looks like you're locking in a much lower valuation on your investment, that might be where the pushback can cut from.
Yeah, I could be wrong, but I think both sides do have to vote, because the Synthetic side has to vote to want to merge, like acquire, and then Derive side has to vote to agree to merge. Yeah. But I'm guessing there is strong backing on the actual teams themselves. Otherwise, this probably wouldn't appear in a public forum afterwards. So we'll see what happens.
No,
But
that's right.
thank
We have the blog post. We have the teams on the Rive side have been silent from what I heard, and then it's probably like
I think they're listening.
yes, or at least
Maybe
they
they're
knew and
hairless,
they are
right?
maybe aware and supportive to some extent. If it was a unexpected and or adversarial takeover, we would have heard a lot more from the team, I'd say. So
Yeah, and given their relationship, I'm sure Kane talks to
yes,
what's his name, Nefi or
yeah. There's Nick. I guess I don't know what is. Yeah, the two co-founders I think have not
some
mentioned too much, but yeah.
communications. But I think this really illustrates that options are the hardest part to build. We've been saying this so many times. You can build perps, you can build spot, you can build lending, but really the missing component is options. And we're waking up to this now. Like suddenly everyone's like, who's Derive? But like unless you've heard of Derive already. But like options is the big news with the Deribit acquisition at 2.9 billion going through. Let's take a look real quick here at just the stats. There's this whole question: is options just not cared about by crypto traders? Is
I
it
can
too
zoom in a little bit on that screen, but yeah, I think yeah, derivatives for sure. As you said, it's easy, not easier, but it's possible to do a perp dex. It's possible to do some type of derivatives options. Again, we're at Panoptic creating options, of course, on chain, and then it's definitely a very, very tough nut to crack for sure.
So everyone wants to crack the nut, they just don't know how to do it. So here's an interesting figure, right? Coinbase Exchange, one of the biggest spot exchanges. Looking at volume, right, in the past 24 hours, they're down here at $3.8 billion in spot volume. So this is your typical buy and sell Bitcoin, ETH, Solana, etc. All of the
I mean, I don't know how many tokens they have listed, but there's probably like a few hundred, right?
yeah,
Yeah.
hundreds. So trying to simplify
No, I
obviously
know, but
all the
so
buying selling, yeah,
this
of
is
the
every
hundreds.
buyers, everyone in the US almost like may have a Coinbase account, but this is where you go to buy. This is where you go to trade for buying and selling.
And that is about $4 billion over the last 24 hours. But then you look at their product here. We'll look at 24-hour volume of their derivatives. So this is going to basically be their futures and perps. They're just on a normal day, 20 billion, 5x more volume, right? Huge potential. And that's from non-options. So now obviously Coinbase is very interesting.
And it's international too. So even US users have a hard time accessing this market. And if Coinbase does this internationally, you have CME, you have even the ETF, or maybe CME might be a better way, but yeah, it's the volume dwarfs what spot trading happens typically in the futures market for sure.
Exactly. Yeah. In this case, 5x, right? So huge comparison. Same thing with Binance. You're looking at 93 billion in their futures. I think they might have options, to be honest, but futures is the main product and perps on Binance versus their 23 billion. So actually, another almost 4x multiple.
Is right? Deribit listed in the derivatives list of?
Let's check. There it is. We're seeing 1.2 billion in volume, so a bit smaller than the perps still, significantly.
But yeah, the perps is a I don't know if it's an anomaly, but it's a you can trade a lot very, very quickly, and even like the Deribit number has some like expiry. You may buy an option every week, so you can trade thousands of times on the perp exchange. You trade maybe a few times a day, depending even on your trading. But yeah, no, it's still almost as much as spot on Coinbase in a way. But yes, it is still sizable, even though it's probably the only options figure here, but it's still sizable.
Yes, I mean right now it's decent, but I think what everyone's looking to is the future. What's coming? What's changing? How do you stay ahead of the game? And if real world assets and institutions actually continue, and just the whole retail model of the Robinhood options have been very successful, so it's not just institutions, but if this trend or even if this future materializes, this is a huge value to Coinbase, and I think the shareholders agree, the markets agree, everything's up. Coinbase stock. Let's just quickly jump to that for fun. This is in part of it being the S&P 500, but you see a huge boost after the Deribit and S&P 500 announcement.
Is it coinciding with the boost we've seen in the ETH price, for instance?
Yeah, so if we look at ETH price over,
I haven't really heard it, but I don't know if that's the driver of like the ETH price going up, or maybe no.
Let's look at the ETH price over 6 months. We're on a downtrend.
No, I think that the pump happened before. So either someone knew, and then the stocks caught on. Yeah, the pump seems to be May 12th, end of day, and then the ETH was go 1 month maybe, but ETH was really like May 6th or 7th. Yeah, exactly.
And then versus Coinbase May 7th, May 6th, 7th.
I mean, I think I tweeted about this as well, but the people want to create NASDAQ on chain. We know which chain wants to do this, NASDAQ on chain. There's a few metrics, but it's like how many transactions, how much volumes. Yes, you can optimize it, reduce latency, increase bandwidth type of thing. Yes, you can get NASDAQ. However, NASDAQ does about a third of their volume is in options. Options on Tesla, options on Amazon. And the options requirement for like throughput and number of transactions is 100x what you have on the spot market. They may do 30% of the volume, but I'm sure they do 99% of the actual orders because of that expiry, liquidity from limitation. So I guess the NASDAQ also does options. That's my point. And then it's still a very sizable portion of their volume, their revenues. I'm sure they make more revenues on the option side than the spot trading side as well. And it's fine to go 2x, 5x, maybe improvement in throughput and latency, but you have a 100x requirement just to be able to match the number of options traded per underlying. Then this is where it gets very hard. And maybe that speaks to also Derive's kind of model is they are doing two markets, BTC and ETH. They have good volumes, good liquidity, but if you really want to meet the institutional demand, then you need also like 10x more strikes, more expiries. There's like a much higher ceiling till you hit the max offering on options than say perp. So and that's why it's so tough to again, tough not to crack. It's hard to scale if you do the same order book based model. Ethereum mainnet, you have no hope. One trade every 12 seconds and it costs you $1. You can't even manage like two like bid ask for like short and long. So we forget about like order books like for options with expiries and strikes. So yeah,
What is the revenue model on the centralized option exchanges like on the NASDAQ? Do they charge commission fees? Because most of the spot trading in your equities, it's free commissions. Is that a big driver for the revenue?
Yeah. So the I went to another rabbit hole the other day, but options, it's a contract, it's exchange, it needs to be custodied, it needs to be kind of a paper trail, and it's regulated by the Options Clearing Corporation. Options clearing makes sure that people have collateral, there's contracts exchange. When it's exercised, you can kind of get the funds. So there's one centralized entity that handles the assignment, but different exchanges, NASDAQ, again, CBOE, the Chicago Board of Options Exchange, there's IEX, there's a bunch of different options exchange that now offer this to their clients. They interact with the OCC clearinghouse at the bottom, tiny amount of fees between the OCC and the exchanges, but from the exchanges to the brokerage firms, this is where most of the fees are created. When you think about Robinhood having no fees, that the brokerage doesn't pay anything to the exchange, and the exchange still pays a very minimal fee to the DTCC, which is the clearing corporation for the spot markets. So the business model of OCC, Options Clearing House, that they clear billions of contracts every year, cost a fraction of a penny, but then it's enough to generate, the tens of not hundreds of millions of revenues. And the exchange to OCC is where a bunch of these fees are generated and captured. The owners of OCC are exchanges themselves. So it's a bit circular, but they pay the fees to the OCC, but then they get the dividends back and they're shareholders in a way. And that is minimal. You're a options market maker that needs to trade millions of times every day. You have a extremely attractive fee schedule. If you're a schmuck like me and you that trades options on Robinhood, the brokerage firm charges you a bunch to pay the exchange, could be Nasdaq again or Cboe, and then the exchange also pays a bit more because the flow is a bit different. But the fees that user face is between brokerage and exchanges, and then the other model, which is it's like a cooperative. You're a member of REI or some kind of mountain equipment company. You get dividends, you pay a fee, you're part of the shareholder list, you benefit by shopping there if you want. Same thing with the exchanges. The exchanges, you can create a new exchange, it probably costs you tens of millions of dollars of legal fees to be able to be onboarded to the clearinghouse. But once you're in the big boy stable, then you can get share the fees, get your name kind of if you need to change anything. So that's a very wealth sharing organization where the users and the owners are the same between the exchanges and the OCC.
Very
That's
interesting.
That's why the Deribit purchase is interesting. It's not part of this ecosystem. It's a slightly different way. It's parallel. Deribit is its own clearinghouse, its own exchange, even its own brokerage firm. So it's all very, very vertically integrated because they could not be seated at the table. And if you say, yes, we do options on crypto, but Bitcoin is the collateral, good luck trying to get on the OCC's board of director list. So that's also where maybe Coinbase will have this parallel infrastructure, parallel kind of integration that is not even dealing with the clearinghouse models that we see in the US now, but a little bit more vertically integrated, which is kind of Coinbase has a lot more power than Nasdaq even within that structure. But that's going to be like the way. So one side is more vertical integration, more kind of efficiencies perhaps, but more centralization on chain. You can have the same vertical structure, but all centralized. Anyone can sit at the table. A lot more kind of open to anyone that wants to participate as well.
Yeah. Do you think this is a good thing for users for it to all consolidate into this one?
I mean, the like any monopoly, it's like you are the whims of who's like in charge, and I mean, Bell Telephone, I guess, was broken up because into like 7 entities, I believe, back in the day, and they competed, and one of them became Verizon, one AT&T, and then it's back to duopoly maybe. So I'd say that this is when regulators could come in and say no. Like even with Google, yes, you cannot have all the search, but no one can compete. So maybe Coinbase would be in a similar situation and kind of hope that Brian Armstrong is there for long enough to keep the same model. But if some other suit comes in and say no, we're going to jack up the price and kind of reduce and squeeze out as much. So medium term, I'm saying it's still good for the users and the customers, but then long term, a lot of these monopolies kind of ossify, value extract, stop to innovate. So
Yeah, interesting point about market competition. The whole Coinbase replacing the S&P 500. You know that the company that is leaving the top 500 is Discover, which a lot of people love, including myself.
With the credit card company.
Yes, the credit card, the high yield savings. You know, good brand, I think. And why it's being acquired by Capital One, who a lot of people hate. Because Capital One has their customer service outside the U.S. It's horrible to deal with. Discover was always U.S.-based service. Very nice to call them on the phone, talk to a real human. Anyways, from the user perspective,
you have great ads too. Capital One ads are boring. The Discover one are funny.
And the letters in the mail, my goodness. But no, they're getting acquired. But there was a whole series of, is this okay? They had to get approved, from the regulators to actually do this whole M&A.
I think there's different views. Some regulation are to help customers for sure, and then you don't want to have kind of rampant consolidation. So I can imagine that whoever's in charge still has the final approval. So regardless of what people think, I'm sure you got approved. That's fine. But if you contrast this with Ethereum cannot say we charge you a different price than you, or we don't allow you to come in, or at least the rails are definitely less harder to tamper with than if it's a centralized company.
Yeah, and honestly, on the Deribit pricing front, I don't know if anything will change on your option prices. I'm guessing they probably think things are working mostly well and will continue to allow it to operate kind of however the market makers are doing. if there are future changes into fee structures and how the whole commissions flow back and stuff, that could be a big change to the users. But
No,
probably
I think
nothing that would
the goal is to have the same way we have futures internationally on Coinbase. You'll probably have options as well. I mean, the white label reskin the front end of Deribit, but it's accessible from Coinbase now. Just easier to onboard. All the capital is in Coinbase already, so no need to kind of post collateral on Deribit. And that's probably going to be like not even US based, but yeah, starting internationally.
starting for non-US. Do you
A
think
lot of
they'll keep with the coin margin accounts, like Bitcoin margined
I think
options?
they have to. I know it's so integral, and a lot of it is the. Uh, I mean, I don't follow it too much, but a lot of the volumes people saw on Deribit over the past 2 years, maybe when it was kind of a bit quieter, is call selling or covered call selling by Bitcoin miners or people that you just park your Bitcoin there, you sell call against it, get some cash, and it's a way to diversify. But it's all backed by default because you have Bitcoin as the collateral. So I would say that yeah, they should or they must maybe keep the same model. Otherwise, they lose 50% of the users, if not more.
Yeah, pretty interesting. They acquire the whole liquidation system and risk management system of Deribit. So,
And they're
anyways,
position builder too. So maybe we'll see this maybe on Coinbase as well.
yeah, no, that's a cool tool for those who don't know. Like, I think you can pull up different strategies and then kind of see the whole payoff profile over different scenarios of pricing. But, anyways, very cool stuff coming to Coinbase. We'll see what happens with Derive and Synthetics. Is as far as who's next? You know, this whole M&A season, Capital One and Discover, Coinbase and Deribit.
And then what was it? The Robinhood bought a layer 2 slash kind of
Oh,
shop.
did they?
Yeah, WonderFi.
Ah,
I don't
yes, I see that. I'm not. But when I hear WonderFi, I think of like the Olympus DAO. So this is a different platform.
Oh, I think so. It's like a semi like whatever centralized exchange on decentralized type of way. I think they had a layer 2.
It
They
was in a
had some
different
products.
country or something. They were trying to
With
target users outside of the US or
I
something.
think it's a Canadian company, so it's like also I don't know if there's an equivalent in the US because maybe it was difficult to do this, and they've been I'm sure around for many years in Canada.
So they acquire
But
all
yeah,
the
so the
licenses.
Robinhood definitely has the is now kind of a layer 2 sequencer operator type of thing. So I think there's, as you said, the Robinhood, Coinbase, in that case, even synthetic established players, kind of diversifying, going to new realms. Yeah, yeah. Who's next? I
Depends
don't
on
know.
Robinhood.
Yeah,
Okay.
who do you think is yeah? What type of which established player doesn't have a foothold in the untapped industry? You think?
Well, if we look at these charts, you know, who has a huge holding, but only in their one area. And
All of the, I mean, yeah,
name
all of the X's for sure.
definitely, but who has the power? You know, so I'm sure everyone is looking around, but Uniswap is the big name that comes to mind. They see a huge market share here. You know, this is an unfortunate stat, like just because we're looking at this second, but typically Uniswap is basically dominating these volume charts. You know, here they have just over $1 billion in volume on their V3. They're seeing V4 spike up, you know, 0.4 billion almost in the last 24 hours. Oh, that's on was that on Arbitrum? Yeah. Okay.
There's Unichain also a bit lower, but yeah.
Yeah.
Oh, before. Yeah.
I guess if you add up all of these, yeah, Uniswap is much bigger than PancakeSwap here. So yeah, you're looking at closer to 4 or 5 billion volume, I think, per day. And I was looking their acquisitions. They have like 3 acquisitions, one in 2021, 2022 that were announced. And the latest one is Crypto the Game 2024. So huge potential here as a spot exchange, kind of if they were to follow after the suits of Coinbase and Kraken and all the other
synthetics. Yeah.
Big spot market, vertical integration. What are they missing? You know, they don't have anything in the lending, the perps, the options market. So kind of, I'm sure everyone is
you have a huge treasury too. Again, you don't have to go through the Uniswap DAO, but that's kind of the the success. They deserve all the success, but definitely the way that you also grow is to diverge into different. Well, yeah, I mean maybe Pancake Swap and Strike I think have a very close relationship,
True.
and then
That's
so
one
that
we
they
might see then.
yeah exactly. So there is definitely like ways you can throw into the different kind of verticals,
Yeah.
but yeah. So even simi lending, I mean there could be a same way that Pump.Fund was a token launcher. Now I have a AMM. On Solana, we see this a lot more, but some lending protocols have kind of prediction markets and then some swaps. So I feel like there is this goal to now maybe you have a bunch of liquidity in your lending protocol, but then you don't know where the funds go. It's a little bit less clear if it's integrated with either a I don't know, AMM for liquidity provisioning or a perp or options protocol for kind of collateralization or access to maybe borrowing demand, meaning like I don't know why people borrow so much, say on Aave or more forward order, but lots of
So
people
yeah.
borrow for leverage, but it's like a Rube Goldberg. You have to loop through like multiple loops of leveraging or some other protocol that allows you to swap. So I feel like there's also like a disconnectedness between the DeFi protocols that could also lead to some M&A for sure.
So a lending protocol with some use case, basically. I think you were saying.
The lending, everyone wants to get a yield. Yes, I can get 5, 10, 25% with the incentives. This is great. But the borrow side, it's less clear. There might be a lot of big players that do lots of borrowing and do some like even like risk neutral type of arbitrage, but borrowing is definitely a use case that is kind of untapped, I'd say.
Very, very interesting. Well, we'll have to keep our eyes open, especially on this options hour. This has been great. We've talked about the biggest mergers and acquisitions. Don't forget our base trading competition is ongoing. Explore. This is your time if you've ever thought about options but don't really know how exactly they work. This is a great time to try because if you just get in the 50th place, you're gonna get some rewards here to
And
compensate.
then yeah, the last 10 are people kind of that just withdrew, so they're out of the game. So you cannot beat 100% loss. You can beat 100% loss. Is what I mean, uh, just by being kind of in the system. So what
That's
about
right.
me?
Let me
Oh
pull
my
up
god,
the
yes.
leaderboard here real quick to let people know what we're talking about.
The price move was almost timed too perfectly because we see a lot of the maybe I can share my screen, but a lot of the top ones are creating bullish strategies, definitely on the buy side of let's say call options, and that's kind of the part that we see a lot more. Oh my god, okay.
Yes. So
Yes, Steve. So yeah, there's about
sorry.
75 top 50 get a price, so we do want to have a lot
All
of
you have
folks.
to do is beat negative negative
That's
0.2%.
right. Who's that Guillaume Lambert dude? Yeah, I'm the first one to lose, 57th place.
Oh man,
I'm
sorry.
delta neutral, man. So if you think about this, I did not lose anything. And sometimes when you're delta neutral, you can get wrecked on the upside. So I'm actually a master of risk management because I did not lose or gain anything. I was neutral the whole way. Try to beat that hybrid. It's number 58. But yes,
Perfect. I mean it's a risk managed perspective. A lot of the top players are very not delta neutral, very delta positive, and so especially there was a post that went out on the Panoptic account analyzing this trade. Very interesting call
so this
option
one
buy. But
did they I think yeah, did they redeploy or it was deep in the
last
money?
last they
Yeah.
got forced exercise, so they were forced to close their position, but at a huge gain. So I haven't seen them unless they made a new position in the
I
last
see.
day. They're sitting comfortably at the top. You know, we got 5 days to go. Maybe they'll take their chances and just hope no one surpasses them. You know,
Yeah.
maybe
I
the
mean the big moves, I don't know if we'll see another one, but if you say you buy put options, you could be now kind of a 5% drawdown could make all of these gains go down in a way and you can win. So yeah,
Yeah, if you go all out with your account, I think you can spend like what 75% of your margin or something.
Yes,
10x leverage. So 5% down on a put option, 5% down in the price. I mean, so yeah, that would be like
10,
40,
50% up.
50% up, and then on your portfolio, 3/4 of that. So like what 37. So you could jump up here to third place.
All right, we just need to crash the
Fourth
price. But the trading is definitely lifted by the price action, but being number one still means you beat everyone else. There's a volume one as well, I think. So there's this
Yeah,
one
we've seen
has,
this neck to neck between the one girl and Eshel Timex.
and then and we know Nicole a little bit, but he's definitely up there in the volume. But then his peanut, who was complaining on Discord that he did not trade successfully, Nick. But yeah, he might be able to maybe take the spot. But without,
Yes.
this is also another one where you can trade, you can be unfortunate with your trading, but still, yeah,
You can be 67 on the one leaderboard, but third on the other.
that's right. We want to generate
Prizes
like
for everyone.
a little bit of what I've seen with Rosalie. We're doing it very well, and I don't know if Izzy is listening, but a lot of the decision making on options trade is like, it has to come second nature, but it has to be very quick. There's one trade, you put a small amount of capital, you don't put all your eggs in one basket, so it's a low risk trade. So the decision should also be faster than if you say I want to buy a house or a car, something that is a huge investment. So a lot of what I trade myself is that there's one or two ways to trade. It takes me maybe 30 seconds to evaluate different parameters, and I know immediately if I'm in and out. And again, master traders can take 10 seconds or 5 seconds. At the end of the day, it's just the holistic view. You see a lot of things. There might be an opportunity, small one. You put 10% of your collateral there. You have kind of one trade that works for you. You have maybe two or three ones that are balancing. So the speed of decision making for options trading for sure is something that people have to develop as a skill. It's not just, okay, let me do 25 hours of research for one trade, but rather 25 seconds of gut feeling, gut check, and then you do it.
Yeah, and this is big. If you're, I know if you're in DeFi and you're watching this right now, you're probably either already know about options or pretty curious, and we know that this is coming. Coinbase thinks so, and Synthetics thinks so, and probably Kraken is thinking about it right now. So this is kind of the next wave. Options trading is already huge in TradFi. We've been seeing this forever, and now we're trying to finally seeing it materialize. Stay up with the trends. Watch Options Hour, learn, experiment. It's the best way to learn. And base, it's like almost zero gas fees.
Yeah. So yeah, I think we can talk about the broader strategy, but we at Panoptic, we're doing this trading competition, we're doing the show, we're doing a lot of informational content and research because it's a new way to trade, different way to trade. There's a lot of education that needs to happen. Trial and error during a competition where the stakes are low is the best way to learn. Or watching me teaching Rosalie how to trade is also another way to learn. Or me teaching Izzy how to convert from LP into selling. This is kind of beneficial for everyone that thinks they know a little bit about options, but it's a lot deeper, a lot more depth. It's actually very, very fun to trade, but there's so much strategies you can do that, again, you have to learn the basics. However, we're meeting a bunch of folks, market makers, funds, liquid funds. They know about options. They have a quant on their team and they say, we want to trade options. We do it on Deribit. We do it maybe on Paradigms, OTC, but they don't need to be sold on the idea. They just need to see a venue that's liquid, that allows strategies to be realized, and they'll flock to it. It's a much easier sell to say, we're doing options. Oh yes, of course, we're hedging already on Deribit, but then the prices are horrible. Then trying to say, okay, maybe one girl, yes, you've done a lot of trading volume, but like you could be like, there's a lot of ways to trade profitably, and then yeah, knowing how to do it is the best way. So what I mean is that even the Coinbase or Quanta or Synthetics acquisition, it might be on the like institutional side, liquid fund, larger players, like could be public, it could be like family offices, but the larger holders of funds now want to risk manage, which is totally different than retail wanting to go 100x. So I'd say that the Coinbase generally sees this writing on the wall. Options on crypto are poised to kind of capture all of that activity from the institutional side. So maybe Synthetics as well. And
Yeah, I
yeah,
kind of think of this as like I'll give a photographer metaphor. It's like a lot of people just do natural light photography. They learn how to use a camera. They can shoot on manual. Maybe that's the difference. Auto is like spot trading. They learn to shoot a camera on manual with all its functions. That's like perps, and it can take you really far. You can do a lot of trades with that. But then when you learn to control light, and you can start switching out artificial light. You can overpower the sun. You can do all these amazing things to basically control the scene, basically cinematic scenes almost. That's like this huge toolkit that unlocks this whole world. And so options is a set of tools, but it's a huge set of tools in the toolbox that basically you're missing out on if you're just trading perps.
and if you want to get on the cover of National Geographic, you need to know this. And if you want to do it for your own Instagram feed, even that could help a lot. But yeah, if it's just for Facebook postings, come on, yeah, point and shoot is fine. But yeah,
Yeah.
no, I get this. It's like anything, even golf or any skills based activity, there is no ceiling almost. Could be video games, could be golf, could be photography, could be options for sure. There is kind of a much higher kind of ceiling than spot perps without downplaying their impact. But I think I'd say there's a much more rich diversity, and that's kind of what I like about it for sure.
Yes, risk management and consistently, having a strategy. So, anyways, this has been a great options hour. We're at the top of the hour here. Stay tuned. 5 more days on the base trading contest. You can join by just heading to our website panoptic.xyz/blog, and you'll see all of the details in our latest article there outlining how to join. It's super simple. All you have to do is deposit in this ETH USDC V4 market on base in Panoptic, and then you can put on a trade and climb the leaderboard. So you got 5 more days to participate. Lots of prizes. Prize pool's $5,000 in USDC total, and over 5 million Panoptic points,
And maybe
as
a
well
chance to be on the show too, if you're not too
and
shy.
and talk with this guy on the show.
We'll award this live, I guess. Or again, you don't have to dox yourself. Don't use this as a disincentive to win the top prize. But yes, we do want to hear about people's trading strategies, experience as well. So yeah, feel free to share, and yeah, go at it.
Yeah, message on Discord. Please reach out to us if you like to be a participant and maybe talk some trading and what you don't have to share your alpha, but anything helps. So, anyways, yes, this has been Options Hour. Stay tuned for Friday. We'll go over the best and worst traders of the base trading competition a couple days before it is over, and then we'll announce the winners next week when the contest ends on Monday, Eastern time zone. So we will see. Any other announcements or things the Panoptimist should be aware of?
No, if you're at consensus and for some reason you're listening to this live stream, go reach out. So Izzy, you can ping us on Twitter, but Izzy and Rosalie are there. They're happy to meet anyone that is interested about our options. So yeah, feel free to reach out. We'll do the whatever conference circuit permissionless HCC as well. So yeah, we're happy to meet you. So yeah, anything that you want to ask us, for free. And yeah.
Wonderful. Well, let's cue the music, and this has been a wonderful week. Very exciting in the markets here. Let's stay tuned and see where it takes us with this this new M&A season and who will be next.
Is it